Alright, so today is our final day of the Forex Revival and it's been great. The studies has been awesome, the participation was good, just a few people couldn't join. Yesterday too we couldn't hold our meeting because of light outs. So today we are going to finalize everything and yeah. Alright, so what is the first thing that we learn to do? That is when you want to take a trade. So just a little bit of recap. We learned that the first thing to do is to identify the market direction. So if you open your broker, to identify an uptrend, you need to see your higher highs and then the higher lows. And then for you to identify a downtrend, you need to see your lower highs and then lower lows. Alright, so all these are in the previous videos. So if you are missing, you can just go and then you do what? You watch it. Alright, and if you have a ranging market is a kind of market that has created one particular structure, which is the resistance at the top, and then another structure at the down, which is a support, and the candles or market or price keep testing it over and over and over again. So all these are included in the first video. That is the lesson 1. You can go and then you do what? You watch it. Now and then the next day we came back to look at what? Identifying swing points. You can identify a lot of swing points on the same structure, but then our focus or concentration is on what? On the major ones, because they are the ones we are going to connect for us to have an appropriate what? Trend line. Alright, and as we are able to get our trend line, automatically we are able to get our support and what? The resistance levels. So that's what we did on the second day, and then on the third day we were able to connect the swing points, and then we had our what? Support and resistance. All videos are available. Alright, so yesterday, which was Thursday, that we were supposed to identify our entry points. That is, how do you know that this is where you want to take the trade or not? So we were all advised to go and then do some studies on the candlestick patterns, because when price is reaching your trend line or your support and resistance, you need to know the kind of candlestick pattern or the candlestick that is forming over there, whether it is going to reject or it is going to what? Break through before you take the trade. That is what we wanted to do yesterday, but then we couldn't do it. Alright, so I'm going to combine all and make sure that we are able to do what? Understand. Alright, so it is not compulsory that you know all the candlestick patterns and then their formations at a go. If you are able to get them all, it will help you in the long run, but you need to take your time and then be what? Master it one after the what? The other. Alright, so that you don't confuse yourselves. Okay, so it's very important. So I am more familiar with only 4 patterns for now, 4 candlesticks, which is the hammer, the shooting star, the bearish, engulfing, and then what? The bullish engulfing. Alright, so let's say something. Let me show you something quickly before I forget. That is this is one of my favorite currency, GBP USD. So GBP USD, I was able to. Now, when you come to the market, avoid the temptation of let me buy here, let me sell here, let me buy here, let me sell here. Avoid that temptation. So what happens is that when you come to the market and you see a ranging market, draw your support and resistance on the swing points, and then wait for price to get to your support and then go for a buy, or wait for your price to get to resistance and then go for a sell. Don't come to the market and then see your market in what? In an uptrend and trying to look for a sell positions in there. You might not be there yet. So just stay focused on what? On the how do we call it? On what you are supposed to do in that direction. Alright? So it is assumed that we all know what to do in an uptrend. So let's say this is, you open your broker and then you see that your market is forming what? Higher highs, higher lows, higher highs, higher lows. Alright, so you have your higher high, came down to form higher low, higher high, came down to form higher low, higher high, higher lows. So definitely you know that this is an uptrend. So you are going to do what? You are going to take this trade for what? For a buy. For a sell, this is a downtrend. Sorry, this is a downtrend. This is what? A downtrend, not higher highs, higher lows. I'm sorry. This is what? Lower highs, lower lows. Sorry, I am misinterpreting the patterns of an uptrend for this. All right. So let me go over again. You open your broker and then you see that this is what? This is a downtrend. This is a downtrend. So you are able to see what? You are able to see your lower highs and then lower low, lower high, lower low, lower high, lower low. I already explained to you the reason why it is called lower highs and lower lows, because the market is already what? Going to the lower region. All right, but the buyers were able to push it upwards, making it a lower high. So when it came down, where the sellers brought it down again, at that point, that is what we call what? The lower low. All right, so regard the FOREX explanation and stick to this. All right, so now you are able to see, maybe you got into the market and then you see that no, we have our lower high here, lower low. It went up, created another lower high, and then came down, lower low. So you know that this, you see this, you know that this market, let's say you meet the market at this place. All right, so you see that this market is going down. All right, so first and most important thing is what? You just go into what? You have marked your swing points. All right, mark your swing points. This is one, this is one, this is one, this is one. Your swing points are there. So as a trader, you just go to what? Pick your trend line. Pick your trend line, and then you draw your trend line here. All right, very simple. You go, sorry. You go here. What did I pick? No. Have you seen that I didn't waste much time before drawing my trend line? Yes. So when you master it, you'll be able to do it effortlessly. All right. So now the market was what? Was coming down. Was coming down, and then remember we are looking for sells here in a downtrend. So the market was going up. The market was going up. It was going up. You are waiting for it to hit your trend line. All right. So now, when the market was about to hit your trend line, okay, whether it hit the trend line or was about to hit the trend line, what is the candlestick pattern that has formed over there? All right. So I will recommend the shooting star and then the bearish engulfing candle to you at this point. All right, at this point. Now the shooting star candlestick is a kind of candlestick that has been rejected by the buyers from the top and has formed a long wick at the top at the point of what? Resistance. All right, so this is a particular example of a shooting star. Can you see this one here? All right, this one here. Okay, you will see that the buyers took it to the top and then it has been rejected. Okay, you don't always see this and then interpret it as the market is going down. No, when you see it at the resistance point, okay, or at the resistance zone, it's interpreted as what? The buyers being rejected and then the market will go down. Okay, yes. So if you should see this, you should see this around your trend line, that is at the resistance zone, for over the next 1, 2, 3, 4 hours or 3 hours. Your price should be coming down, and then if you are able to take such a trade, you will be in profit. All right, so that is one example over there, a shooting star. All right, it is already in the Candlestick Bible, and I believe everybody has it. All right, so this is another one. When this market was going up, it was in an uptrend, not uptrend, but the buyers were possessing the market. Okay, the market is in the hands of the buyers, and you can see that a big bearish candle was able to form just after the last buyer has finished. Okay, let's say that person, that candle is a person. All right, so this is what a bearish engulfing candle. Now, bearish candles are when the sellers are in the market, and then the engulfing means it has been covered or it has been defeated by you have been defeated, or something that has a covering. Okay, this has been engulfed. All right, so this has given you an idea. So even though it didn't get to your trend line, definitely this is the zone. We call these places the areas of value. All right, areas of value. So the bearish engulfing candle that has covered the buyers over here. When I say covered, it means it has swallowed it. You can see that the bearish engulfing candle, this candle is bigger than this. Okay, the one that brought it up. All right, so it gives you an idea that this market will go down, and we can see it happening just as I explained. All right, so if you go to this place too, you will see similar thing happening over here. All right, you see similar thing happening. I believe that is okay. All right, so when you come here too, when you come over here too, you see that this market is falling, but then a big bullish candle has taken engulf the red one. All right, so this is also a bullish engulfing candle that has given you an idea that the market should go up. But remember, this is a downtrend, and it is dangerous to go for a buy in a downtrend. So even if you see a bullish engulfing candle forming at the point of resistance here, and you are tempted to go into the market, you have seen the pattern, but then this will work perfectly for you if the market were to be in an uptrend. All right, so even if you see this pattern, yes, the pattern has been formed, but you take the trade over here, how long will the trade go up before going against you? Are you seeing that? That is why it is always advisable to do what? It is always advisable to take sells in a downtrend, and then buys in an uptrend. All right, okay, so I've explained how to use the shooting star. You have already drawn what? You have already drawn your trend line, so you know your support and resistance. So you are just waiting patiently. Are you getting it? You are just waiting patiently. So whenever you come to the market, you can take about 2, 3, 4 pairs, and then you analyze them, draw your trend line on them, and be monitoring them. Are you getting it? And be monitoring them. At least if one fails, 3 will go through. Alright? Or if 2 fail, you get 2, and then you are breaking even for that day. Alright? But you need to follow the rules. Okay? So I've been able to explain to you the use of the bearish engulfing candle when you see it forming at the point of resistance. Don't see bearish engulfing candle just forming anywhere and think that the market is going to go down. No. Follow the rules. That is why we have taken the lessons one after the other. You can't just look at it and then go into the market because you have seen a bearish engulfing candle. No. It should be forming where? At the point of resistance. Okay? So this is a shooting star, so you all can read more about the shooting star. This shooting star, that is a market or a rejected seller. Alright, I call it the rejected seller. So the term that I use for it is a rejected seller is a winning buyer. Alright, and a rejected buyer is a winning seller. Alright, so the market went up to this place, and then the sellers push it down. So the push that brought all these candles down over here. Alright, and then you also look at what the bearish engulfing pattern that has formed when the market hits the trend line or is about to hit the trend line. So that simply tells you that the market is now in the hands of what? The sellers. Alright, okay. So, and then one important thing too that I have come across, this is arranging markets. Okay, arranging markets, because we can see that the market goes up, hit this place, come down, went up, it broke through a little, came down to hit this place, went up. So we can see that there is something here, there is a fight here. Okay, there is a little concentration over here whenever the market gets to this place, because we have a history here, one here, another one here, and then another one here. Alright, what's happening here, we call it false breakout. Okay, it broke out. You might be thinking that maybe this market is going to buy. Okay, already it's buying. Okay, so you think that the trend is going to what? Continue. Maybe this one is coming, you think that it's come and hit this place and then go up again. Alright, but it didn't work like that. Alright, so it came to this place and then went up and then came to this place. Now, one thing that you all need to know is that whenever the market is getting nearer to a point, the resistance zone or the support zone, okay, there is something we call weak rejection. Okay, weak rejection. Now, the psychology is that when the market gets there, it should come down. When it gets there, it should come down. Alright, so just as it happened over here, when it gets to this place, it came down. This one has defied the logic. When it gets to this place, which is the support, it went up. When it gets to this place, it came down. But you realize that when it gets to this place, instead of going up, there are weak rejections over here. Okay, we can see that the market, if it comes down, the buyers push it up. It comes down, they push it up. They push it up. It comes down. That is what it's doing over here. Okay, under normal circumstances, it's supposed to reach this place and then go up again. as it works in what? In a ranging market. Alright, but when you get to this place, instead of going up, it's trying to there is a little concentration over there, as in a fight between the sellers and then the buyers. So yours is just to wait. Alright, yours is just to wait and see what will happen. Alright, so at the end of the day, we saw that there is a breakout. Okay, there is a breakout over here. Now I also learned today that we can use the 20 moving average to see to have another confirmation. So what I also learned about this is that when the market is so when there is a concentration, okay, as in a fight between the buyers and sellers around the point of resistance, you can use the 20 moving average to check and see which direction the market will go. Alright, so let me set the 20 moving average for you, so that alright, so it is already here. So it can be on the exponential. Alright, it can be on the exponential. So when there is a concentration around the support or the resistance, you can set the the 20 moving average. Okay, and then when you set the 20 moving average, what do you see? You see that the last candle has not broken through the 20 moving average, which gives you an idea that the market will go down. Alright, the market will go down. So that is it. Alright, so now after this breakout, okay, after this breakout, now this is what is going to happen about the breakout strategy. When you see this, you can go into the market. Okay, you can go into the market and then you can secure some pips or some blues. Alright, but this is what happens usually when it breaks out like that. It means that the market is about to change direction. Alright, because it was ranging, it was in sideways. Okay, so after it broke out like that, let's say you miss the entry. Okay, you miss the entry. So this is what you do. You wait for the market to come and do a retest. You wait for the market to come and do a retest, and this is how the retest happens. So we can see that the market is being rejected here, and it will come to the same place here, either that region, or it will come and test the support. So once it comes to test the support, that place has also become what? A resistance. Okay, so if you hear someone say support becoming a resistance, resistance becoming a support, this is what they mean. Remember, this place was a support, they come and then they go up, but it has broken through, so it is now a resistance. Alright, so after it came to test this place, what will happen is that the market what is that? Sorry, a minute. Alright, so after testing this place, once it hits that place, what will happen is that you know that the market is going to what? Shoot down. So those who miss the first entry, they can take it over here. Alright, so that is the breakout and then the retest strategy. Are you getting the point? Alright, so now what is the clue that when it gets there, it will not break through and there is certainty that it will come down? It is not a certainty, but it is a strategy that is being used. So what happens is that you don't only wait and then you want to see it get there and then come down. Remember the candlestick patterns or the formations, you apply it throughout. Are you getting it? When the market is getting to this place, when it's getting to the support, you know that you are coming to apply the retest strategy to take the trade. But when it was getting to the place and then a bullish candle form or a bullish engulfing candle form over there, all right, or a hammer candle forms over there, you cannot enter the trade at that point, because you all know that bullish engulfing candle takes the market up, or hammer candle is a bullish candle. Okay, so when it's getting over there, you do what? You look for a bearish engulfing candle, just like we located it over here. All right, just like we saw it over here, or a shooting star. Okay, now when it gets over there, you will realize that maybe it is let me say there is concentration over there, as in the buyers fighting with the sellers and all those things. So it also gives you an idea. All right, and then by then the 20 moving average should also be covering it at the top. The candlestick shouldn't break through. All right, so it gives you an idea that the market will respect the retest strategy. Okay, all right, so let me pick another pair, and then maybe we'll do one on it. Let me look for an uptrend, a very good uptrend. I spoke about a downtrend, so let me look for an uptrend. And I spoke about the ranging too. Alright, so this is an uptrend. The 20 moving average is very good. It's very good. So usually people use it a lot. People use it a lot when the market, you know that when it's below the candles, it's definitely in an uptrend. When it's above the candles, it's definitely a downtrend. All right, just as you can see, look at it. Okay, just as you can see it. All right, but you know, you can't use one indicator to take a trade. You just see 20 moving how do you say it, average below the candles, and then you know that it's a buy, so this market is going to buy. No, you can be disappointed. All right, so when you follow your strategies, when you follow all the conditions and you are able to meet all the conditions and you see it also there, it is also another confirmation. All right, a lot of people say they don't use indicators, but then price action deals with understanding all the candles and their formations. Okay, so the indicators are also there to help you, to assist you. Okay, all right, so I'm looking for, all right, so this is a very good uptrend. So I was thinking of identifying major swings and then connect them, but with just my eyes I can be able to identify and draw a trend here. All right, but as a beginner you need to do identify your swings, mark them, and then you do you draw it. All right, so I am able to draw my support over there, okay, in an uptrend. Now see what happened. This is what happened when the sellers were bringing the market down. This arrow has started misbehaving again. when the sellers were bringing the market down here, look at the candle that sent the market up. So this is what? This is a bullish engulfing candle that has formed, but already you have drawn your trend line. Okay, you have drawn your trend line, waiting for it to what? Waiting for the price to reach there. So upon reaching there, what happened? There is a bullish engulfing candle that has formed over there. Okay, so if you drew your trend line and then you also saw the bullish engulfing candle over here, at least this gives you an idea that this market will go up. All right, it gives you an idea that this market will go up. Okay, so this is how you apply the bullish engulfing candle also. Okay, yes. So let me look for the last one, which is the hammer. This is the hammer, and then I'll be able to alright, so this is it forming. This is it also forming over here. Okay, this is the hammer also forming over here. You realize that the sellers brought the market down a bit, and then the hammer has formed over here. Okay, remember the trend is what? It's in an uptrend, so we assume that you already have what? Your trend line. Alright, if I increase the size of my candles, you will see it clearly. Okay, but if I increase it, sometimes decreasing it becomes a problem, so I always maintain it like this. Okay, so you have already drawn what? You have already drawn your trend line. So once the market is, or the price is about to hit it or hit it, you see a formation. Okay, you see that the hammer has been formed, and the hammer is a market or a candle that the sellers were in the market, or the market is in the hands of the sellers, and then it has been rejected. It has been rejected heavily by what? By the buyers. That's why they were able to what? Take it up. Are you getting it? So for now, I choose to concentrate on this candle. At least I have mastered the bullish engulfing candle, the bearish engulfing candle, the shooting star, and then the hammer. So if I come to the market and then I see all my structures, and then I saw that the candlestick formation around my trend line, maybe it's an inverted hammer, or it's those ones, the tweezers and all other ones. Since I'm not familiar with it, I will leave it to see what the market will do. I get in it. The ones that I am familiar with, that is what I will trade confidently. So you enter the trade, you know that you did the right thing. Don't gamble. So the candlesticks are there, they are in the Bible. Master it, and then make sure that you draw your trend line before you see them what? Forming when it gets into that region. Alright, so that is how we do it. That is how we do it. Alright, so let me see, I can get another pair for alright, so this is it. This is another one here. So we had our trend line over here. Don't think that maybe I'm just seeing the formation and I'm drawing my trend line on it just to explain my point. No, you all realize that this market was coming down and has formed what? This thing, how do we call it? A string over here. This one also came down, a string here. This one also came down, a string here. This one also came down, a string here. This one also came down. Alright, so I just connected all the strings to have a trend line. Are you getting the point? I connected all the strings to have a trend line. Now when this market, this is an uptrend, so I'm looking for a buy. Is that not so? So when this market came down, came down, it broke through my trend line, so I waited to see what to do, and then I saw the rejection. Look at the rejection. This is what we call a hammer candle. Okay, the